Well, it's Saturday at 8:24 a.m. and we are debating monetary policy. We talked about the Fed. I want to zoom out for just one layer of detail because I think one way to understand this, the way that I understand it, is that there are different pressures on the Federal Reserve to act in different ways, and what I see when I watched the testimony yesterday, the Joint Economic Committee, is that there's one political party that very explicitly is saying the kinds of things that you're saying, Peter. You're saying that inflation is higher than the official headline number, that the Fed doing things like quantitative easing, which is one of the sort of unconventional things they did during the crisis to try to increase the monetary supply and kickstart the economy, that's a disastrous path to follow. Ron Paul obviously has made these ideas quite famous, but it's spread throughout the Republican Party. It's now a kind of central Republican Party.
But I would
idea.
say most Republicans don't understand how bad it's going to get when the Fed does the right thing after having done the wrong thing for so long. When they finally let interest rates go up, it's going to be very problematic for a country that is so over-leveraged. Banks are going to fail. The government's going to have to default on a lot of its obligations. Because if you just think about how much we've borrowed, you mentioned what happened under Paul Volcker. Let's say in a couple of years, the official funded debt is $20 trillion. If interest rates go to 10%, it's going to cost us $1 trillion a year just to pay the interest on the national debt.
People have been predicting the interest rate spikes for a while. They've been predicting very high levels of inflation.
And it's going to happen.
It has not happened yet. But let me ask you, I want to ask you this, because you're obviously the views that you hold and that are, I think, broadly in the sort of same conceptual area as Ron Paul and other people. Do you think that those views have become more popular among the Republican Party and have been articulated more over time?
First, actually, my math was wrong. It's $2 trillion a year in interest at 20 trillion.
Sure.
So that's the entire tax collection. But look, I don't think that people understand how the Fed's role, how instrumental it has been to creating all of the macroeconomic problems that are plaguing us right now. Because by keeping interest rates too low for too long, it has screwed up the economy. We don't save enough. We don't produce enough. We have too many people working in the service sector, in government, in banking, in retail, in healthcare and education. Meanwhile, we can't produce the things that we need to consume. We have $50 billion a month trade deficits because this economy doesn't work anymore because all the resources are misallocated. It's going to be painful to put them back together. But if we don't do it, we're going to have a real crash in this country that's going to make 2008 look like prosperity.
Can I jump in real quick?
Yes, you can. Please. Diedrich, how are you? Nice to see you.
I just want to put forward, I think the focus, the conversation has kind of been overly focused in one particular area. I don't see how we can blame the entire recession or the whole fiscal crisis upon the Fed. And I also don't really see that the solution to everything is going to be strictly in monetary policy. I think most people generally agree that there is, and even in your introduction, you talked about that there's an overall political crisis. And I think it would behoove us to talk more about how maybe the Fed fits into that. But it's not just the Fed or nothing, and the Fed's going to solve it, because I don't believe just
the Congress did help. It wasn't only the Fed.
That's a really important point, and it's in fact the point that Bernanke made in his testimony, which was he said, I need some help from Congress. You guys have a job too. Fiscal policy and monetary policy work together, and nobody.
But he's wrong, and he knows that, right? So I mean, we can say whatever, but
Bernanke's wrong.
Bernanke's wrong.
Well, he lies too. He's not just wrong.
I mean, what monetarists on the right and Keynesians on the left came to an understanding of in the 90s or whatever is that the primary driver of business cycles is action by the Federal Reserve.
Well, they were wrong.
Ben Bernanke can alleviate the entire recession by himself if he so chose.
No, he can't. He could make it much worse.
No, but here's my point, though.
And he has said that.
Here's my point. Here's my meta point, which is important, and I think for people at home this is very important. You, Peter Schiff, your views have a lot of traction in the Republican Party.
Not really. Maybe with Ron Paul, but not. I mean, he's not the typical Republican.
Well, here, look, I'll show you. Let's show Mitt Romney talking about Ben Bernanke. Just as an example of this. This is a question at an NBC debate about whether Mitt Romney would reappoint Ben Bernanke.
Would Ben Bernanke have a job in your administration?
No, I'd be looking for somebody new. I think Ben Bernanke has overinflated the amount of currency that he's created. QE2 did not work. It did not get Americans back to work. It did not get the economy going again.
Now, my point here is that the position that you just said, Carl, you just said Ben Bernanke can solve this by himself, which is a view you never hear articulated anywhere in politics. My point is that there is an asymmetry in politics and in the debate we have, which is that the views that Peter have articulated have gained a lot of traction. They're known on the internet. I didn't realize until very recently that there was essentially the view that you were articulating, and in fact that a lot of economists have been saying, right? That the Fed is doing too little, that actually the Fed could solve the business cycle. And so what it seems to me is that the seesaw is being sat on only on one side, and that's part of what's producing the Fed in action.
So it has been.
Literally every single mainstream economist I know thinks the Fed has done too little. And
that's the problem. These guys are wrong.
This is actually a really, really unusual time for the Fed because the Fed has often, over its history, faced political pressure, but it's actually usually from the left. Political pressure because it's not doing enough about employment. And this is a very new time where it's facing a lot of political pressure from the right, from people who are paranoid about inflation going crazy and are really paranoid about how they act. And I think that they have to respond to this pressure, because one of the things we know when we look at the history of central banking is that an independent central bank is actually what prevents inflation from getting out of control.
Right.
And what they're fearful of is losing that independence, because we know that if we turn our central banking over to people like Ron Paul, we will end up with a disaster. Oh. And so they've got to balance a very tight line of being able to work within the political system and not lose that independence, but yet do the actions that we want them to do in order to, help the economy.
Last word. Remember, inflation is going to run out of control. It's going to devastate the economy. The Fed has no tools now to contain it, because if they have to raise interest rates in order to fight the inflation genie that they've let out of the bottle, the U.S. government's going to have to default on its bonds. We're going to have failures in the banking system without any bailouts. It's going to be a much bigger collapse than what happened in 2008.
When are we going to have the inflation?
It's already here. Have you bought it?
All right, we have this on.
Have you been to a supermarket?
Gas prices going down.
We have this on video.
I want a real bet. Do you have to go?
Peter Schiff, president of the brokerage firm Euro Pacific Capital. Thank you for your time this morning. I really appreciate it. How Bill Clinton messed up Barack Obama's week. Up next.
We can have a bet.